to Reporter's Notebook, where we talk to the Washington Examiner's top journalists about the stories breaking on their beats. I'm Jim Antle. I'm joined today by energy and environment reporter Breanne Deppisch. Breanne, we're anticipating some hot demand for oil this year. What can we talk about in terms of the new year? What are we expecting the market to look like?
Yes, absolutely. So we've seen some pretty optimistic reports out this week. I would say more bullish than originally expected. That's because demand from China is actually growing at a faster rate as they move to reopen their economy, kind of plowing past their high COVID cases, and completely repealing their zero COVID policy. But we saw two new reports out this week, the first being OPEC's kind of monthly oil forecast that basically put demand unchanged. They had expected to slow it a little bit and expecting strong demand from China. The following day, the International Energy Agency put out its report, which predicts oil to grow to a record level of more than 100 million barrels per day in 2023, and that's underpinned by more than half of that is underpinned by growth that's tied to China, demand from China. So really, I would say better than expected prognoses there. They do expect prices to go up, at least especially in the second half of 2023. But so far, I think things have held steadier than anticipated heading into, what was really a volatile and fairly uncertain year.
Right. I mean, because we've seen a lot of fluctuations in gas prices, for instance, and energy prices more broadly. So we're starting to see a little bit of stabilization there, you think?
At least in the near term, yes. So, these reports all did make mention, of course, of the elephant in the room, or maybe I should say bear, which is Russia. Come February 5th, the EU ban on all petroleum imports from Russia takes effect. This could significantly, this could cause disruption in the market. Russia has also warned that beginning in February, it will impose a 5-month ban on selling its oil to any countries that abide by the G7 oil price cap. So this could it's unclear if they will actually do that or if they will rely on kind of their illegal shadow fleet of cargoes.
Right.
But yeah, so there are definitely some more red flags ahead. We're not entirely in the clear, but.
I mean, is Russia really in a position to do that, given that there's all of these efforts internationally to isolate them as a result of the war in Ukraine?
That's a pretty loaded question. Are they in a position to do that? Economically speaking, probably not. But I think they've continued to make decisions that have confounded many people, myself included. And I would not be surprised if they do make good on their threats, as they've done in other energy markets, including on the gas pipelines and other things.
I mean, obviously what we've tried to do and our European allies have tried to do up to this point to deter Russia hasn't really ended the war in Ukraine.
Absolutely not. And actually, as we've talked about before, Europe is sitting pretty, but that is due in large part just to the mild winter weather that they've had. This past week, they just passed the mid-year threshold for gas demand, and they are more than double at their expected levels of storage. So it does put them in a good position for 2023-2024 winter. Not so great for climate scientists and environmentalists.
Right. That's right. Now, finally, we have your advertisement of a new green form of energy, right? I mean, wind energy.
Oh, yes. My earrings. They are little windmills.
So is this a sign that you're tilting at windmills in the new year?
This is actually a nod to the offshore wind development in New Jersey, which there is siting and pre-development underway.
Excellent. Thank you, Breanne.
Thank you, Jim.
You can read Breanne and subscribe to our Daily on Energy newsletter at washingtonexaminer.com.